The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here on this Wednesday the 3rd of December. Well, into December, huh? All right, let's get going here. We're looking at the Dow. Let's see, first of all, the E-mini, you got this look here. We've got a new buy signal. Maybe it's a buy mode, but that 200-period moving average reversed the price. We're looking at a peak E in the 5-minute chart coming slumping from the 6860s right down to the 50... sorry, I said 68. Was that 62? Yeah, 62 level down to the 68.17. Now we're running quite nicely to the upside. Stopped on the 5-minute chart, right at the 5-minute. Man, these 200-period moving averages are such important tools that we use. And then we had a peak D in the 10-minute chart at that level. It was E in the 5. D in the 10 and comes slumping down, and now we've had a nice move up again in the 200-period moving average. We went over it in the 10-minute chart. Now we're under it, trying hard to kind of find its way back up, but I think it will. There's a magnet at that 68.43 level. We'll see if we can get back to it and then push over. It doesn't have to be a rush. Just take your time, E-mini. We're looking good so far. Let's see if we can hold. All right, let's go back. So I wanted to run the numbers. And I wanted to do a couple of things. So I had an email completely forgot about. Basil, back in late October, you had said if by the second week of November, I haven't got it in front of me. You always say that if the market holds close to can survive September, October, and get close to the year's high, it should close close or at an all-time high if in the second week of November it's doing well. Well, the second week of November, yes, let's just go through that. Let me just finish this up here. So the Dow, the second week of December second week of November was right here. It hadn't made its low. And then it hit 45,728 and then started to rally. So, yeah, I think that what I'm looking at now is that nothing has changed, but with almost every technician saying, oh, yeah, we're going to close at the year's highs. Whoa. I'm saying, I'm just happy that we got the low in the Dow for add-on positions. I just want to see where it goes. We first have to get through in the Dow 48,431, the all-time high, before I can even consider the remaining. There are not that many days in December. If I remember, it's like 21 or 20 something, 21 maybe, trading days. Maybe it's more, but it's not that many. So I just want to see a good, strong leg B, and we're getting there today. We're up 124. I want to see a good, strong leg B and get into this ugly bar after the high was made on the 12th. The 13th had a really ugly turnaround day. Remember, I said I'm waiting to see how we hold for a peak D to see if we can go higher. Push, we came down. We did have a short position, but that was just a very brief. And now what we're looking at here is long positions, only long positions. I'm not interested in short positions at this particular time. There are some stocks that look like they're quite weak. So with that said, look at that weekly chart. I mean, the 9-period moving average over the 14 so far, that is really nice action. All I can say is using the Chapman Wave Inside Track repellent zone, it worked there. Now you've got a higher level. So the first level will be rising trend line, 48,300. 48,300. That's a long way to go. So let's just go one step at a time. I like everything that at least I'm looking at right now, the 9s over the 14, the MACD is good, the retro strength is good. The stochastic's the one thing that worried me, that it's only at 65%, and we're already up 120, and it hasn't really moved as much as it should. I want to see 80% or more in the stochastic for me to say, all right, now we can actually start to move much, much higher. So this is a work in progress. If you look at the S&P, the stochastic here is at 87%, much better, much stronger than the Dow. It's doing very nicely. Today's just down 3 1/4 at 68.26. I like what I'm seeing so far. That doesn't mean to say I cannot, I hear people looking, and they look at they look at the price, and they say, oh yeah, this projects, and they do a 1-to-1, and they come up with 7,000 or something, or 7,020 in the S&P. I can look at it and I can agree, but that's got nothing to do with reality. Reality is, unless you can break the major top of 69.20.34 with good price action, everything else has to be good. I can't do that. I can say it's a possibility. Most importantly, what I would say is 67.80. The whole 67.80s is really important support. That's, to me, way more important to look at support than to look at the upside trajectory. Within the let's see. Let me just move over here because I had a little trouble. I think it's a Teams thing. My chart every once in a while just kind of blanks out, and I think it just did it. And yep, it just did it. And then it comes right back again. There's nothing I can do. It's a Teams thing. I don't know what to say. All right. Now, within the context of what we're looking at here, the QQQ. Now, the QQQ, it's broad. It has some stocks that have done very well, and there are some stocks that have got slammed. So I'm very impressed that it's holding. It's just down $1.80 at 620. Let's just watch this closely because you've already started a peak leg B. It might be a peak B today. Most importantly, what I am looking at is that the 9s over the 14, the MACD is good, the retro strength is good, and the stochastic finally just went to 86%, and that's a good sign. And the weekly chart is good, not as good as the S&P weekly, but still very nice. So what I'm looking at here, the big resistance will be at about 627. Let's see how it can get there. If it can get there in the next 2 days, I like it in the next 2 days. Now, the IWM, this is very interesting. It's at 246.87, up $1.72. If the rates come down, from everything that I've followed in the IWM, the lower rates just means that a lot of the small caps, this is the 2000, the IWM is the Russell 2000 right there, iShares. It will mean that they, at least in terms of borrowing money, it's a helpful thing. And that's the reason why sometimes you get a nice big move as soon as people talk about lower rates. So lower rates, let's look at the lower rates. The TLT is up today, up 25 cents at 89.06. The TBT, that is the inversion, that is the ultra short Lehman 20-year Treasury bond ETF. That's basically looking at the 30-year yield of 33.76, 3.376. If you look at the 10-year yield, TNX.X, what did I do? TXN.X. No, it has to be. So, TNX.X. There it is. It's down nicely today, down 25 cents at 440.61. That's 4.61. I'll be back. Dow's up 91. S&P's down 5. I'll be right back. Basil Chapman, Technicians Hour. See you in a moment.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched The Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
All right, so look what's happened with the E-mini. Remember I said the 200-period moving average in the 1-minute chart is like a magnet. That's at 68.43, and now we are at 68.43. Okay, now what's important is that look at the 5-minute chart. It's at peak C. It's got this turnaround. The 9-period moving average hasn't gone green yet. So the moment it goes green, it says, now I can tackle the 68.47 level. And you go step by step. Once it breaks that, I can say, aha, now we got a potential leg D in the 5-minute chart. But look, the 10-minute chart is only at leg B. So in this next, what do we get, 10-minute charts, the next 2 minutes, going to 10:20, where I think the real players come into the market, we're going to see the action then. Either it sells off. We've already had that twice today. Let's see if we can start a move to the upside. Then you've got a break of 68. You've got a break of the high of today, the high of this retracement of 68.47.25. You go to 68.47.50. That continues leg B. If it's after the next couple of minutes, then it'll be a leg C. But that's really good because it's filling in this ugly bar. That's what you want to see, a nice steady move to the upside, like a V-shaped pattern. Days young, we'll see what happens. I'm just showing you techniques that I use for subscribers to my opening call. And let's just go on to, I mentioned the yields. It looks like the yields are coming down a little bit. So gold is holding well. A question about the GDX. The GDX trading at 82.17, up 55 cents. Yeah, that's very nice action. And it looks like it wants to make a D, a leg D above 84.03, 84.04. SARS leg D. Major support right now is at 80.14 to 80.14 to 79.80. Actually, all I can say is that if it goes for 30 minutes, if it goes under 80.78, be careful because you could test yesterday's low. That's the GDX. Silver is trading at leg D. We waited for that. We said it should get to a D, and then we're going to assess how much further it can go because the technicals are absolutely really good. 94% in the stochastic. MACD is expanding. 914 is good. Yep, that's acting very nicely. Now what we want to do is say, where's the support? Support's at 57.50 for the silver contract. That's a continuous contract. Now let's go to the, I want you to go to, so some questions came in. Do you have... So, Basil, do you have a view of, I might have skipped something, but I've just grabbed this as a question. GATX, how it will perform in 2026. Ooh, GA, how does it perform in 26? Got my crystal ball out. GATX is GATX Corporation. Just give me a quick, where am I going to do that? Which, I'll go there. Okay, GTAX is trading at 162.92. I spoke about this some time ago because did I put it in? Yeah, GATX is a leasing and asset management, rail car and tank containers. I forgot about this. I like that. GATX. I mean, I just like the sector right now. GATX ? Okay. So what I'm going to do is this. I'm going to complete the notation because this peak D in the weekly chart, I never updated it, but it did go to a sell signal and then a sell mode. That sell mode took out the support line, but that support line has been like, I got to hug that support line. I got to test it before so it goes under it. But look how many times every time it's gone under it, it's closed above it. This weekly chart is the strongest that we've got this week. That's this week. Yeah, that's very good. Okay, so let's go one step at a time. And what I want you to do is to do this. I'm going to put it down, an up arrow, because it's already in a buy signal to buy mode. It's going to go to peak A right there. Then look at how the 200 period moving average, look at the W formation. That's the dreaded H. I'm going to do all these techniques right now, even though it's not Technical Friday and there are many other calls and a lot of things that we've got to do. All I'm saying is that I'm going to take a little time here because we're in a phase that says, here we go. In a phase that says the low that was made after that very sharp pullback in the general market is starting to sort out what's really working and what is looking like it works, but then it fails. So this is one of those that start to steadily look peak A, peak B, peak C, peak D, waiting for the 9-period moving average to cross positive, waiting for it to, in the W formation with the dreaded H, holds the left side. That's a really good positive. What it says is when it rallies, it could go over the arch and close over the arch. If it goes under it, it says, that's going to be a lot of resistance, but this is support. So what it says is, you can consider that this is in a buy mode in the daily chart, pushing away from the 200 period moving average. The whole 159 to 156 area, 157 area is very strong support. The weekly chart, very steady every single week, 1, 2, 3, 4. For the last 4 weeks since 5 weeks ago when it made its low in the 151-ish area, this is very good. And I love single leg A to the downside. When this happens, that's what the Dow did. That's what a number of the key indices did. I'm always cognizant of the fact that it did in one fell move all that it had to do, and now it's starting something fresh. But the 9-period moving average hasn't turned positive. So let me do this. I want to open this up for a much bigger picture. Look, here is GATX. I mean, look at this steady move up. Peak A, B, C, D, E, and it stops in June, July of 2018. Takes a long sideways move. You remember a rectangle formation, invariably, if it doesn't significantly take out the upside, this is all education, folks. If it doesn't take out the horizontal resistance line, but takes out the support line, be careful because it takes a long time to get back in, but very often it gets back into the rectangle and then takes another dip to the downside. This hasn't. So this is really a powerful move. So this is saying in this, I'd like to do this. Let me just check this out. Oh, wouldn't this be interesting? Here I'm going to go to this. Wait, who asked me the question? Capone. Okay, in the Tiger YouTube. look at this. I'm sure you're looking right now because you just asked the question. Have a look at this chart. Yeah, I have to move this a little bit. Okay, I'll move this. This is what I use for subscribers. Every day I do an analysis of the Dow. It really applies to the general market, what to look for, why we're looking for it, and what will happen if after 130 such and such is happening, etc. But have a look at this chart here. Where is it? Where is it? I wanted just one single move. There it is. So have a look at this. GATX. GATX, what are we looking at? We're using the Dow. Look at the Dow and how strong it is over the 9-period moving average. But look at look at this. GATX daily turned around, and now it's got the green 9-period exponential moving average. What I wanted to show is the candle. Now let me just do it this way here. Just one simple technical tool. Look at the way the price has walked the 9-period moving average. When it does that, that is just fabulous power. And that's what it's doing right now. So that says I can, even though it's gumption on my part, call it chutzpah, I can look at 2026. And that's exactly what I'm going to look at right now. We've got a break coming up. And we've got the Dow up 152. S&P is now up 3. I like this action. Very slow move to the upside. We've had a digestive phase. 1020. We're looking good.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risks, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Hi folks, so now I can do this. I can look at the GATX chart. We were looking at GATX. It's GATX Corporation, Leasing and Asset Management, Railcar and Tank Containers. And I can say, based on the Chapman Wave Insight, here we go, all right there. So at a peak D, instant restart, that means it's E/A, F/B, G/C, and then it goes to a D. Well, it's walking the 14 and 9 period moving averages as support and really like a trampoline moving up and then coming back to test it, moving up. So I'm going to just suggest that at this particular point, we're looking at 162.92. The all-time high was just in September, I think it was at 178.26. Let me just type that in. 178.26. What I will say is that, did I finish that sentence about when the market is, when the Dow is close to its all-time highs after surviving September, October, the second week of November, it invariably closes close to or at all-time highs. So that means GATX is really, look at, it's like a picture of the economy, right? Moving higher, then down, moving up and down, moving up and down, but higher highs up until now, that is. And, of course, now we're getting reports about all different sorts of things. But I'm just going to suggest to you, now let me get the big picture out. And the big picture says, look at this trend line. I love these trends. Usually when you get to your third trend line, and then especially if you get to the fourth, which usually takes you to crash whatever it is, a top that is so important that it's not going to be a minor pullback. Look at this. You've got perfect support right there. If I do a Chapman Wave Inside track right there, support line, make it nice and wide, getting down, well, it's a rising trend line, so the price will rise. Getting to 140 from 162 right now, I don't know what it's going to take, but it'll take a lot because of the manner in which the 9-period moving average is moving up. However, for the first time, the MACD's gone negative, and look, the relative strength monthly is not as strong as it was, and the stochastics at 71%. The on-balance volume is still very good. So what I'm going to say to you, there are a lot of ifs when you're looking at the future, and I'm going to say to you, if any time in December, GATX trading at 162.92 up $1.92 right now is able to get into the upper part of this body of this ugly candle of October, and it can get, if we can even tag 170, if we can just trade for 3 days in the daily chart and 1 week in the weekly chart above, what did I just say it was right there? 168. If we can trade above 168, I think then 2026 is going to look very good. Now, here's the other thing. Every time it's made a peak, it's pulled back for a couple of months. So this one is 1, 2, 3. It's 3 months already. So it's going to take a little while, I think, for it to make a new high. If it makes that new high the first week of January, that's going to be a really good sign, because now look what I can do. It's the first time that I can do it. I can go to this chart right here, and I can go click, and I can move it all the way to the bottom of this right there. Okay. As a parallel chart, look at this. Isn't it amazing how these parallels, look at that. Look at that up channel. That's fantastic. So what I'm going to say is that if it closes above 180 for 2 out of 3 months, anytime in 2026, it's going to go even higher. So let's just one step at a time. And remember the support, first of all, the support of last month, which was 150, is 150.47. 150 is the key support. I like it very much, making higher highs and higher lows. Wow, talk about higher highs and higher lows. Look at the E-mini. It just snapped right through. That's the reason why we've been adding to the long. If you're interested in the opening call, folks, we've had some very nice positions. Yes, we did take a loss on something yesterday that had been fantastic to us. So a big deal. We took a 3-point-something loss, 3% loss. We've had 100 and something percent gains on some of these stocks. All I'm saying is that we're looking at positions now, fresh, different kinds of positions altogether than what we had. All I can say is I'm trying to follow the market. Here's a rectangle formation. Remember, I've got webinars. You'll be able to get webinars on a rectangle. If in a rectangle formation, if it starts to make higher highs and higher lows, there's a good chance it can go to the previous peak. I'm going a little conservative. I'm not going to the peak today of 62.25. I'm going to this bar, the ugly bar that started to move down at 9:05 this morning, a.m., from 68.56.50. So that says the rule of thumb is it'll go just under, right on, or just above the previous high, that high that was made. But as long as the 9-period moving average is acting good, acting well, you're fine. If at any point after that it takes out a halfway marker, that'll be 68.38 in the rectangle formation, be careful because it could go a lot lower. I don't see that. I see that this is a 2-click session. I've tried at least a 2-click session. I hope it's going to work. And within that context, this is a leg C in the 10-minute chart, leg D in the 5-minute chart, and I can just do this real quick. That was a peak C right there, but you know what I've done for quite a long time? Maybe I'll have a webinar on this as well. Let me just do this here. Edit. So this becomes C1, and this has been working for me for a little while now, and I usually like percentages to be very high, but I don't actually add them up. I have it in my mind, so therefore it's not really an accurate percentage, but that's good enough for me. Now look what's happened. You've got a brand new, so that becomes a Chapman wave C, peak C1, C2 in the 1-minute chart, pulls back to the 68.31 area. Now it's gone peak A. Look at this, peak A. Peak B, peak C, and it should go to a leg D, and then we have to reassess. So that's in the 1-minute chart, and that takes you to that exact rectangle formation that we were talking about in the 5-minute chart. Think of that as daily, weekly, monthly, or 1 minute, 5 minute, 10 minute. The question came in, could I look at Apple? Yeah, I mentioned Apple, I think it was yesterday or the day before. I said Apple's acting very, very well. I just don't know how much further. As a leader, it should lead to the upside, and it is today. It's up 54 cents at 286.73 at a new all-time high. So what I've tried to do for subscribers is I've got stocks that, for instance, here's just an example. Robinhood. I have to do this only as a discussion because nobody actually knows what you have in portfolios and all that. How else is anybody supposed to know? So I'll just do this publicly now. We got in, we're in at 16s in Robinhood, just a little bit left, but we added along at 109.00, 1, 2, 3, 4, 5, 6 sessions ago, and here it is at 130.12 in leg B in the daily, but the weekly has a lot of work to do. I'll be back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. an amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
S&P, can you ask that question again? For some reason I've lost it. I'm not able to get it back again. Oh, I can get it back again. Is that today? Okay, so in the meantime, let's get back to what we were looking at. So, Apple was a question from some time ago. So, wow, isn't that interesting? Because here it is at all-time highs. This is leg C. The reason why I looked at Robinhood is to say that this particular move from the lows that were made just a week ago, this is a different bull market. Apple's leading. General Electric, which should be doing fantastically. Look at this. General Electric is down to $1.67, $2.87. Boeing, which has all these orders, and everyone yesterday was saying, oh, Boeing is a buy. It's going to go to 280 or whatever it is. It's down $2 at 2 or 3.59. This is a tougher market than before. It's very selective. I mean, who the heck would have thought that General Motors, like Apple, is at an all-time high here? General Motors. I should mention we are long General Motors, but the point is that this is unusual. We missed AA, Alcoa. Darn, I just missed it. And look at the move today, up to 43.87. I mean, this is like almost 6%. This is like a high-tech stock. Look, it broke out of that beautiful resistance level, monthly inside track repellent zone, new leg E. It could even be more than that. It's an E, and I'm calling it for the weekly chart. This is a different bull market. That's what I'm saying. Nobody seems to be talking about the rotation that's going on. Well, I don't know about nobody. I haven't heard too many people talking about that. So the question came in, what about the XLF? Well, the XLF, this is now current, right? XLF is a question that's current to today. The XLF, nice move up, but it hasn't broken the resistance line. The weekly chart went negative, went back to positive. It's still holding pretty darn well from the 54.50 all-time high back in September. It did go down to the 51s, but I'm looking at this and I'm saying, yeah, that's good action. JP Morgan was the question. JP Morgan is trading up $1.07, but it's not. I mean, it's holding well, but just it isn't participating the same way. If I go to this chart right here, you remember this is the chart that we look at. So we did go to D in the 1-minute chart. There's a leg D in the 5-minute chart. Still a leg C in the 10-minute chart. The reason why is this is the chart that has this particular pattern right here. Look at this. This is pink. Is the XLF S&P Select Financial Fund or Spider Fund in pink. Monthly chart, long term. There's no technicals whatsoever. There's only the overlap of the S&P, which is blue, and the XLF, because I spent years saying, what mirrors at least the S&P, maybe not so much the Dow, although they look pretty much the same, but let's go to the S&P 500. Look at this, the lows, the highs, everything. And what I've been saying is, if after the move that was made 3 months ago, we can go to higher highs, all-time highs in both, it has to be both, the XLF and the S&P, that really augurs well for 2026. So I hope I answered the question. The question was, what is my outlook? My outlook is that I want to see the financials moving as well as any of the other indices, if not better. All right? So let's just go back to this. This is the 1 minute chart. Wouldn't I love to have been doing this as a live webinar today? Look at all the techniques that I've just discussed that are right here. So simple. Of course, I still make plenty of mistakes. Not the point. The point is, it's just nice to have these techniques. All right, let's get back to the story. Amazon question came in. Amazon, AMZN, down $1.41. This is what worries me. All-time high at 258.60, a peak C in the daily chart. This is so unusual, but it's still active because it hasn't taken out the low that was made around about the 20th of October, which is at about 210. So this means it's active, and that means that from that low, I can count. This is an A right here, A, and this becomes a B. So there's a brand new underneath the previous high move up. But this for the going into the holiday season, the really active holiday season. Wow. If Amazon doesn't make an all-time high above 258.60 in December, I think it's going to be a little bit of shaky. And that's what I mean by this rotational correction. Deep cyclicals, Alcoa, General Motors. What are we looking at here? We're looking at a change in the makeup. IWM is now trading up 266. You see, it's starting to improve, but I have to put it together with the interest rate. So let's just go back and remember I was looking at the TNX.X. I just wanted to tell you that look, went to peak C. We're always looking for D. There's your D, peak C, and there's your D. And what does it do at D? Other things can happen at D. Objective in a buy signal to buy mode is to get to the fourth highest PPD, then to assess because other things happen at a peak D. All right. The monthly chart went to an E after that D. D, way back in 2022 in about the 41 area. And then what does it do? It pulls back to 32, 33, and then it goes up to almost 50 at peak E, and that was back in 2023. Wait a minute. The yields, of course the yields haven't been, the TNX hasn't been to the 50 level since, this is 1 year, 2 years. Yeah, over 2 years. Amazing. All right. So we're going to be watching Wednesday's action very closely. Next question came in. So Amazon, let me just give you the support that has to hold on Amazon. So forget the upside. Upside's clear to 240, 250, whatever it can do. It's the downside I'm worried about. The 9-period moving average still hasn't turned pink, but in the daily, but the weekly has held very nicely. So the support level in December, if it takes out 222 as support, be careful because that's a problem for Amazon. All right. Okay. Next question was IBRX. Now let me go back to IBRGDX and go in. Okay. Yeah. So thank you very much, EKS and the Tiger YouTube. You gave a whole bunch of railcar leasing, the sector itself. Yeah, good. Thank you very much for helping out. Man, these different TFNN, the Tiger Den, just information pours out. It's fantastic. And the Tiger YouTube. All right, let's get back to our story here. We want to be looking at IBRX. Yeah, this is peak A, peak C, and it's pulled back very sharply to $2.13. It's making lower lows and lower highs in the weekly. That means that until it starts IBRX Immunity Bio. Wow, these biotech stocks, amazing. All right, and if it can, I'm suggesting to you that if it pops to $2.50 at any time, I'd say in the next week, I don't care what it is, without taking out the low that was made on the 14th of November of 1.95. If it manages to go to 250, it's going to be a very quick run to the 271 area. That's the way it's kind of building strength in this lopsided arch formation in the weekly chart. I'll be back in a moment. Dow's up 169, S&P's up 11, Basil, Chapman, Tiger Conditions Hour. See you back in a moment.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hi folks, we're back, and I was just looking at, let me just see, so I believe, let's see. Yeah, so a question came in, IRN. This is the next generation data centers, renewable energy, GPUs. We're in from the 22s. We had a buy yesterday just to add to the positions. We've taken the really great gains all the way to the 70. It went to hit 76.87 on the 5th of November. But it's been, this is what I mean, that we've got to be very careful. Some sectors are beginning to move really well. Other sectors that were great are just taking a well-earned breather. So the question is, where would you add to that again. Just we missed that yesterday. Was the one that we took. Actually, that was just a very small loss. That was a 1 point something loss, but I'm 1%. That is 1 point something percent. But I do want to add to it. I'm watching this closely, and if you add to it, I would treat it more as, look, if you add to it, it's got the pattern of the dreaded H. If it takes it out significantly, 39.52 support, if it goes into the 38s, that's a problem. And the weekly chart is still, look at that, 9 is still very strong over the 14. All the other technical indicators are weak, but that's the most important. So I'm going to say I would rather start adding back on strength. At this particular point, it's still where money is being sold from these big winners, former big winners, and going into new things. That's what we're looking at. So don't be in a rush to add to it. I'm with you. I want to get back. I want you to add to the position, but it's going to be a very slow look. You remember we were looking at whatever, a GATX, and I said, look at this, the H pattern that is successful. If it turns around, all of a sudden you're looking at a cup formation. We haven't got there yet. I'll draw it in and keep it there, but we haven't really got there. Oh my, that's the end of the show. And there were still many questions to come. Sorry about that. So check out my opening call daily newsletter. I believe we did get the one that we were looking for pre-market, and that's great. But I'm going to do this. I'm going to say, check me out tomorrow, Thursday, because today's close is going to be really important. Have a wonderful day. Stay tuned for Steve Rhodes. I will see you.